Would you believe that there are now over 10 million cryptocurrencies in existence and counting? If that number feels overwhelming, you're not alone. Navigating the crypto space can be confusing, especially when you're trying to make sense of where a project like Pi Network fits in. But here's the thing. If you've made it this far as a Pi pioneer, you're already ahead of the crowd. The real question is, do you understand what you're mining? Let's be honest, many pioneers are just waiting for the day they can cash out. But very few have taken the time to actually learn what this ecosystem is all about. It's 2025, and some of us are still chasing every new token, meme coin, and hype trend hoping for quick gains without understanding the foundations of this space. If you're serious about crypto, especially Pi, it's time to stop guessing and start learning. In this video, I'll walk you through the basics of cryptocurrency, what it really is, and show you exactly where Pi Network fits in. Stay with me, because this knowledge could be what separates the early quitters from those who actually build lasting value from their mining journey. For true crypto enthusiasts, or those curious about it, let's start with what cryptocurrency is, or rather, what cryptocurrencies are. Despite common misconceptions, most cryptocurrencies aren't actually currencies in the traditional sense, like US dollars or British pounds. Instead, they function more like assets comparable to stocks, which is why they're increasingly called digital assets. But what does that really mean? What are you actually obtaining when you purchase a cryptocurrency? Surprisingly, it's quite similar to what you're getting when you buy a share of stock. Long ago, company shares were exchanged as physical paper certificates, each marked with a unique serial number. These certificates were issued directly by the company, which recorded the owner's details alongside the serial number. Today, however, most shares are traded electronically. In essence, this shift means that physical certificates are no longer handed over. Instead, digital records assign unique serial numbers to new owners, while the company keeps an updated register of ownership. I hope you're keeping up. I'm doing my best to simplify everything and lay down the basic knowledge that ties it all together. Just like how modern shares represent ownership through digital records, owning a cryptocurrency means you hold a unique digital code. There's no physical coin or certificate involved. But there are a couple of key differences. First, cryptocurrencies usually aren't issued by a single company. Instead, their creation is programmed into computer code and follows set rules. Second, no single organization keeps track of who owns what. Instead, a global network of computers takes care of that job. These computers are often rewarded through small fees or newly created crypto for keeping the records accurate. All this information is stored on something called a blockchain, which works like a shared digital ledger that anyone on the network can access and verify. Another big difference is that you don't always have to share your personal information to use a cryptocurrency blockchain. In theory, anyone with internet access can get crypto and store it in a personal wallet, a kind of secure digital account that isn't tied to your name or ID. However, in real life, most people buy crypto through exchanges, like apps or websites, and these platforms usually do ask for your personal details to meet legal and regulatory requirements. The fourth difference is a big one. The supply of most cryptocurrencies can't easily be changed or manipulated, and if you store your crypto in your personal wallet, meaning you hold the private keys, it can't be taken away from you. That's because the rules about how much crypto exists are built into the code, and the blockchain that tracks ownership is designed to be unchangeable. This makes cryptocurrencies one of the first truly ownable digital assets, something you can fully control without relying on a third party. Compare that to other digital assets like stocks or even the money in your bank account. Those can technically be frozen or seized under certain conditions, and you don't have full control. So, to sum it all up, cryptocurrencies are digital assets, much like stocks, which are also mostly digital now. They work as unique digital codes that can be transferred between people. But what sets crypto apart is that its creation is automated by code, and its ownership is tracked on decentralized, unchangeable blockchains. Before we continue and explore the categories of cryptocurrencies and how Pi Network fits into these, you can check out my Pi Network portfolio for more detailed information. The link is in the description of this video. Also, don't forget to give this video a thumbs up to support the channel and share it with others. At a basic level, cryptocurrencies usually fall into two main groups: coins and tokens. Coins are the native digital assets that operate on their own blockchains. They're often used to pay transaction fees within their networks and can also be given as rewards to the computers or participants that help maintain these blockchains. Creating a new blockchain and its native coin requires a lot of work and resources. Some well-known examples are Bitcoin, BTC, and Ethereum, ETH, each running on their own separate blockchains. Tokens, on the other hand, are digital assets that live on top of an existing blockchain. Unlike coins, which are used for fees and rewards on their own blockchains, tokens usually serve specific purposes within applications or ecosystems built on another blockchain. For example, many decentralized finance, DeFi projects create their own tokens that run on the Ethereum blockchain. It's generally easier and less costly to launch a token than to create a whole new blockchain and coin. So, where does Pi Network fit into all this? Pi Network aims to build its own blockchain and launch its own native cryptocurrency called Pi. The plan is for Pi to work like a coin main digital asset on the Pi blockchain. It's designed to be used for transactions and other functions within the Pi ecosystem. As of February 20, 2025, Pi Network officially launched its open mainnet, moving from a closed system to a fully decentralized blockchain. This milestone means that Pi is now publicly tradable on select cryptocurrency exchanges, and users can transfer their Pi coins to external wallets outside the Pi app. What sets Pi Network apart is its unique approach to accessibility. Unlike traditional cryptocurrencies like Bitcoin, which require powerful computers and lots of electricity to mine, Pi allows users to mine coins right from their mobile phones. It's a low-energy, user-friendly method designed to bring more people into the world of crypto. I know some people are wondering if the Pi Network is actually fully decentralized. Don't worry, we will focus on that in another video. The value and success of any cryptocurrency, including Pi, are heavily influenced by its narrative, the story it tells, and the problem it aims to solve. Pi Network's core story focuses on accessibility, inclusivity, and practical everyday use. It's designed to give anyone with a smartphone a chance to participate in the crypto space without needing advanced technical skills or a large financial investment. The goal is to build a widely usable, user-friendly cryptocurrency that fits into everyday life and powers a new kind of peer-to-peer economy. This vision positions Pi as a possible answer to some of the key challenges that have slowed down mainstream adoption of crypto-like technical complexity, high entry costs, and the environmental impact of traditional mining. By promoting mobile-first mining and prioritizing community building, Pi Network hopes to create strong momentum through shared participation, which could lead to widespread use and long-term value. Now that Pi has officially launched its open mainnet, it can be evaluated more like other publicly traded cryptocurrencies. Traditional factors such as price, market cap, and exchange listings now apply more directly. To assess Pi's real potential, there are several key areas to watch. Let's start with project development and roadmap progress. Is the core team making steady progress on building the blockchain, tools, and overall ecosystem? Then we move to utility and ecosystem growth. Are developers creating apps and services that run on Pi? Is there evidence of Pi being used in the real world? We can't complete this without talking about the community engagement and KYC progress. A strong, active community and verified users through KYC, know your customer, are essential for a decentralized network. Pi has made solid progress here, especially in helping verified users migrate to the mainnet. Another aspect is the vision and narrative strength. Is the project's long-term vision for wide adoption and everyday use still resonating with users and drawing in new ones? Also, look deeply into the market performance and exchange listings. Since going live on the open mainnet, Pi's price activity and trading volume on platforms like OKX and BitGet offer a first glimpse into how it's being received in the broader market. For a project like Pi, which has now moved into its open mainnet phase, its future potential depends on how well it follows through on its original goals, how strong and useful its ecosystem becomes, and how it performs in the broader crypto market. There are a few key things to keep in mind when engaging with Pi Network. First, there's a well-known principle in crypto. Not your keys, not your crypto. In simple terms, if you don't control your private keys, you don't truly own your assets. While Pi was originally mined and managed within the Pi Network app, users are now encouraged to move their coins to a non-custodial Pi wallet, where they control their own passphrase, also known as a private key. This gives you full ownership of your Pi. Leaving your assets on an exchange means the exchange holds the keys for you, and if anything goes wrong with that platform, your funds could be at risk. Now that external transfers and trading are possible, it's more important than ever to understand how to manage and secure your own wallet. Second, while Pi is now trading on some exchanges, the core vision of the project is not about fast profits. Instead, it focuses on long-term utility and real-world adoption. If you support Pi's mission of creating a more inclusive and widely used cryptocurrency, then staying engaged with the project, supporting its growth, and using Pi within its ecosystem are more meaningful than simply watching the price charts. The focus should be on milestones, community efforts, and the gradual expansion of real use cases that give Pi lasting value. Finally, if you ever feel like you're missing out on the wider crypto market, don't let that discourage you. The cryptocurrency world moves in cycles, and new opportunities are always emerging. For a project like Pi Network focused on long-term growth and real-world adoption, what matters most is staying involved and understanding where the project is in its development journey. The opportunity with Pi has shifted over time. In the beginning, it was about early participation through mobile mining. Now, it's also about exploring how Pi can be used within its expanding ecosystem and how it performs on exchanges where it's listed. Being consistent, informed, and engaged is the best way to benefit from what Pi Network is building. Cryptocurrencies like Pi are built on decentralized systems that give users more control, ownership, and potential utility. Pi Network stands out because it focuses on accessibility, letting everyday people participate in the crypto space straight from their phones. Now that Pi has launched its open mainnet, it's entering a new chapter where real-world use, market performance, and ecosystem growth will shape its future. Whether you've been part of the journey since the early mining days or you're just getting started, what matters most is staying informed, securing your assets, and engaging with the vision Pi is building. The crypto space will keep evolving, and so will the opportunities. Pi Network is no longer just about mining, it's about participating in something bigger. My name is Tony, and this is Basic Knowledge. Till my next video, keep mining.